Okay, let's dive into the story of a man who didn't just play the Wall Street game, he basically solved it. And this isn't just another story about getting rich, it's really about a secret revolution that happened in finance, one led by a mathematician who saw the market as just one giant code waiting to be broken.
So let's just start with a number that honestly looks like a typo. 66.1%. That was the average gross annual return of his medallion fund for 30 years straight. I mean, to put that in perspective, most people on Wall Street would say that's just impossible.
And that number, well, it made him a complete legend, but a really, really private one. You know, people would call him the greatest investor on Wall Street. But a lot of people on Wall Street had no idea who he even was. He was kind of playing in a universe he built all by himself.
So, the big question is, how on earth did he do it? Well, the answer really lies in the fact that he was not your typical Wall Street guy. Not at all. He didn't have an MBA, he didn't rely on gut feelings. No, his journey to cracking the market started in a completely different world.
Yeah, his path to becoming a billionaire investor was, let's just say it was unconventional. Long before he ever thought about stocks and bonds, his entire career was defined by two things that seem about as far from investing as you can get: super abstract math and Cold War code breaking.
Right, so this guy was this brilliant mind living in a totally different world, focused on abstract shapes and secret government codes. He even co-authored something called the Chern-Simons theory. It's this landmark paper in geometry that physicists are still using today to try and understand the universe. He was literally decoding the cosmos.
And what's so wild about this timeline is that it looks nothing like the resume of a future billionaire investor. I mean, a PhD at 23, then off to crack codes for the NSA, then building up a world-class math department. It wasn't until he was in his mid-40s that he even turned his attention to the markets and started Renaissance technologies.
So this completely unconventional background, that was the key. That was his secret weapon. He didn't see the market as a place of stories and company fundamentals. To him, it was just a giant, messy, noisy data set, a code that he was convinced could be cracked.
So he believed the market was a puzzle that could be solved, just not with gut feelings. No, it had to be with data and algorithms. So his team, they would painstakingly collect and clean just mountains of historical data, looking for these tiny, fleeting, but repeatable patterns, these little glitches in the matrix that nobody else could see. And this is the crucial part. Once the model was running, they had to trust it completely.
And this just perfectly shows the difference, right? It's night and day. While your traditional funds were relying on some star manager's gut feeling about where French bonds were headed, Renaissance was building these incredibly complex models based on statistical certainty. They weren't trying to predict the future, they were just exploiting these tiny brief inefficiencies that their models told them existed.
They really saw themselves as professionals in a sea of amateurs, just finding these small, repeatable advantages. And this quote, wow, it says it all, doesn't it? They basically believed that most of the market was just driven by emotion and pure guesswork, and that a systematic scientific approach would just win out in the long run.
And their secret sauce was just so complex, so proprietary, that trying to figure it out from the outside was useless. You could watch them win over and over, but you would have absolutely no idea how they were doing it. It was this combination of their unique data, their insane models, and their execution systems. Totally impossible to replicate.
But it wasn't just about the math. A huge part of the magic was the unique culture he built. The whole environment at Renaissance was just as important to its success as any single algorithm.
He basically created a scientific think tank that was laser-focused on solving the market, and he intentionally avoided hiring people with traditional finance backgrounds. Their headquarters was apparently more like a graduate school campus than a trading floor, just filled with these brilliant minds from fields like astrophysics and computational linguistics, all just trying to find that one little signal in all the noise.
And you hear it straight from the man himself. This quote really gets to the heart of his philosophy. What he valued above everything else was the scientific method. He hired people who were trained to test hypotheses and followed the data wherever it led, and he deliberately avoided people who were soaked in the conventional wisdom of Wall Street.
But this part is fascinating. It just goes to show how incredibly difficult it was to stick to that purely data-driven philosophy, even for the guy who invented it. I mean, during a market crash, that human impulse to just panic and hit the sell button is immense. This admission just shows that even the hyper-rational Jim Simons was susceptible to the exact same emotional biases as the rest of us. And inside this super logical, data-driven machine, this deep political crack started to emerge, right between Simons and his co-CEO, Robert Mercer. So while Simons was a huge donor to democratic causes, Mercer became one of the biggest and most influential backers of right-leaning movements.
It created this really stark, very public ideological divide at the very top of this incredibly secretive firm. So all of this immense success, it obviously created just staggering amounts of wealth. But it also built this profound legacy that stretched way, way beyond the world of finance.
At the time of his death in 2024, this was Jim Simons' estimated net worth, $31.4 billion. He had become one of the wealthiest people on the entire planet, not by, building a product or a service, but just by mastering the hidden patterns inside the market.
And he gave away billions. He channeled his fortune right back into the world of fundamental research and education, the very world that he came from. He used the profits from cracking the market's code to help other people decode the universe, funding everything from autism research to improving math education for the next generation. It really brings his story full circle.
But the very nature of his work?
Well, it brings up a really challenging question about its value to society. Unlike traditional investing, which is supposed to allocate capital to help build companies, quant trading is often described as a zero-sum game. Basically, for one person to win, another person has to lose. It's just transferring wealth from the less skilled players to the more skilled ones.
And that is the ultimate question the book leaves us with. Did this brilliant mind, after solving some of the greatest puzzles in mathematics, end up solving a problem that truly benefited society? Or did he just build the world's most profitable, most elegant money-making machine? It's a puzzle that's definitely worthy of the man who solved the market.